Hey, good morning, everybody. It's Hammer. Today is Friday, February 28th, 2025. And I, of course, am here with the Daily Mortgage Rate Update, the only place on the web where you can join me, or for that matter, anybody live at 9:30 a.m. Eastern Time, broadcasted to you on Facebook and on YouTube. If you're here live, say good morning. If you're watching on the replay, do me a favor, go ahead and give us hashtag replay in the comments. Let me know that you were here. Let Facebook and YouTube know that you were here. Today, we're going to be talking about that PCE inflation data. We talk about how the bond market rally is stalling. Is this really an opportunity, though? Is it catching its breath to light up on fire next week, or is this something we should be worried about? So we're going to go into that. Stick around and join me. Remember to smash that like button, tag an fellow friend, share this post in a group if you're on Facebook. Use that little share button, share it in a group. Nobody ever does it. I say it, but they don't do it. But that's okay. I love you all anyway. If you're on YouTube, give us that thumbs up and go ahead and subscribe. Also, remember, if you would like to be just get a quick text reminder that I'm going live so you don't have to depend on the platforms to remind you and you don't want to miss the show, you can go ahead and sign up for a reminder at hmmr.io/reminder. That's hmmr.io/reminder. That's my short code for everything, that hmmr.io, hammer.io. I like that, right? Nice short one. /reminder will give you a quick link to a text. Again, you can unsubscribe, of course, at any time, and there's no cost for those texts to be reminded that I'm going live. And you can also use this cool QR code over here if you would like to do that instead. But for now, let's go ahead and say hi to all the live folks here this morning, all of my friends that join me. So many of you join me each and every day, and I appreciate you. I do. I appreciate you. I am also glad to be back in home in the Great Smoky Mountains. So of course that means that everything went well with my planes. Nothing bad. And I am glad to have my high speed internet back. The last couple of days have been a little rough because I have had a hard time getting the show started. So I'm glad to have that back. But let's go ahead and say hi this morning. And as I'm doing that, by the way, let me throw this up on the bottom of the screen. The question of the day: what are your plans for this weekend? Let me know in the comments while I'm saying hello and we're getting ready to get into the good stuff and dive deep. Let me know what you guys are doing this weekend. I am ripping out my entire kitchen, all the cabinets, taking all of the furniture out of my living room, dining room, kitchen, open floor plan. We're clearing that area and getting the floors redone next week. Also, my new office. The barn is being built next week. I won't be ready to move in until I refinish the interior. It's just the exterior that they're doing, but I'm getting that built next week. So got a lot going on. This is going to be a busy weekend. Got family, the kids coming to help me take the kitchen apart. So let's say hi to all y'all this morning. Julie Lawrence, good morning. James Mahan, great to see you, sir. Thank you so much for joining me each day. Glenn Boussard, great to see you as well. Allison Foy, good morning. Yasmin Martin, great to have you here. Mallory Fotiadis, good morning. Amy Blauser, TGIF. Is it one of those weeks? For me, coming back from Mexico, I'm just all out of sorts. I feel like it's Monday for me. Angela Walters, good morning. Diana Dixon, great to see you. Win the House You Love. That is a good YouTube channel name, but I don't know your name, but that's a good YouTube channel name. Mortgages with Mike Brown. I like that one too, Mike. Taylor Henry, good morning. Ben King, great to see you, sir. Allison Foy, your dad's 90th in the mountains. 90. Man, I don't know whether to hope I live that long or be afraid if I live that long, but I hope that everything is amazing. I hope your dad has a great celebration. Good morning, Brandy Brickler, Yasmin Martin. Unpacking because you moved this weekend. Congratulations. That's right. Congratulations on the new house. That's so awesome. I hope that you love it. Michael Love, good morning, sir. Julie Lawrence, been so busy this month that you're doing all the cleaning this weekend. Yeah, we're gonna be doing lots of cleaning too. Giddy up, Mr. Randy Teagle. Randy, are you? I know I've asked you this before, but I can't remember. We got to start talking about summer camp soon. I'll have to ask the guys when they want me to promote it a little bit. Well, I see you in. You told me I'm going to see you in July. I know I'll see you in July. You're a Texas guy anyway. Nathan Einkorn, good morning, Nathan. Are you going to summer camp this year? You and the family? You by yourself? Let me know. I'm curious. Amber Moser, good morning. Brandy Brickler's headed to New Orleans from Mardi Gras. Have a wonderful, fantastic time. Say hi to Ashley Corville while you're there for me. Hey, Nathan, it's National Drink Tequila on the Porch with Your Dog Day. We bought tequila. I drank tequila. I'm not a big tequila person, but I drank some different tequilas while I was in Mexico. Mark Clark, good morning. Glen Boussard Farmers Market and open houses, hitting up there and hitting the business. So, all right, y'all, let's dive into the good stuff, you guys, and let's go ahead and get started. Let me turn off my clear thing here. All right, so let's talk about what we got going on today to end of the week and into next week. So first things first, mortgage-backed securities are up now 9 basis points on the morning, which is great. And as you can see down here, let me zoom in. I love that I can go back to having everything here. As I zoom in, why am you guys don't need to see me. That actually, well, it doesn't take up any real estate. Hi, I'm down here, right? So take a look here. You could look at the erratic run this morning. So quick recap of what happened yesterday. Um, I'm I don't have I don't have my whatchamacallit, my thirds ready, but let's do it like this. So quick recap of what happened yesterday. I'm going to go ahead and get rid of this. Yesterday was a very calm day, right? We knew after the morning kind of activity, things are really stable on the day, not really moving much. And over the last 5 days, it's kind of important. I want to show you something. We've really, over the last 5 days, seen mortgage-backed securities kind of holding steady. You can see it here on this chart. We could see that, where we've really been staying right around that 101.50 mark. You can also see that here in the actual candlesticks. And I'm going to bounce over here for a minute and show you. Actually, I'll come back to that. So you can see it right here that we've really just been holding steady, testing that 101.50 level that we have seen that's holding up. Let's talk about the 10-year Treasury yield for a minute. That is currently at 4.24. It is also testing technical resistance. You could see here testing that 200-day moving average at 4.24. So we're watching to see how that holds up. The technicals have been no problem for bonds in the last week, though. Remember, I was in a locking stance for things closing near term a week ago because we had seen mortgage-backed securities. Right. Let's go here and we'd seen it was right here. Right. We'd seen mortgage-backed securities come up and test. This was on the 18th. Right. And then the 19th or the 18th, the 19th, and then the 20th, right? And we'd seen like, hey, we'd kind of bounced up and it looked like, hey, we were testing this 100-day moving average. We were going to test the 200-day moving average. Remember, the 100-day moving average, this green line right here, you could see that we were testing it. It bumped up here, couldn't break it, bumped up here. See how the wicks were touching this line? That means that bonds went up and we're testing those levels, but falling back below. And then all of a sudden, you could see right here, market sentiment shifted at the end of last week. Right. And this week has just been insane. So you could see it actually, here's the 21st. That was a week ago. Market sentiment shifted the middle of last week, not so much the end, but the middle of last week. And we blew through those technical support levels like they didn't exist. And we've kept going since. Now, markets are, look at bonds, right? They've kind of been bouncing up and down right here. You could see after seeing this jump up in such a straight line, you see how now we're kind of sideways, right? We're kind of holding off here. And I told you 101.50 was going to be that line in the sand, and we were at 101.51, 101.52. Today now we've broken. We're at 101.58. The question is, will we push up and hold past that? Now, next week we got jobs data, and that's going to be a big deal. So let's kind of go into what's going on a little bit. So again, the reason that we have seen the 10-year Treasury yield drop down so low, 10-year Treasury currently at 4.24. Remember, it was just a couple weeks ago, we were up here at 4.55. We were 30 basis points in yield, and that's huge. And that's a week and a couple of days ago. All right. What has happened since? We've seen a huge shift in market sentiment. There's no clear article that I can show you to really kind of point to that, but it was referenced on some of this stuff here, right? Signs the U.S. economy is slowing have dovetailed with the idea that tariffs could end up hurting growth more than lifting inflation. So as we were going into the year, the expectation was the economy was going to heat up under a Trump administration. There was so much, economic optimism. Markets were taking a very strong risk on mentality. Stocks were soaring. This is what happened as we were going into 2025. And what's happening now as tariffs are starting to take effect, some have already been implemented. Some were pushed back, but will be implemented again this as we head into March, which is, of course, now. Some are going to be coming on to April, right? Markets have a very different vibe, and this is a big, big deal. So this is why I went from a locking stance. Let me throw some lock advice up here for you to a very much floating stance. And we're going to float everything into next week. Next week, we're going to get jobs data, and next week's going to be a big week because let me show you this chart here. All right, let me make this full screen so I can do this. And let me get my head out of the way for now. All right. Let's talk about what we've seen going on here and what's happened, right? So as we take a look here, hold on, there you go. Okay. So right here, this was back earlier in February. If we match that up here, that's basically right here at the early part of February, you see, right, where we started to lose ground. So look at this red channel that we have here, right? So, as we looked going into January, this was from just terrible stuff here, right? So when we saw here, we were, heading December was bad, January was bad. We see that here. This was December. December we lost ground. January we lost ground. And then we started to recover in January, right through here. We're like, okay, middle of January was our worst levels that we saw here back on January 13th. So you could see those right here. Let me slide that up a little bit. Okay, so you can see that right here. And after the middle of January, that was when Trump actually took office, and you could see that bonds have improved since then. There's been a lot more uncertainty in markets, a lot more fear, a lot less optimism. Now, we did see a pullback, right? And we were like, okay, we got to be aware of that. And then we saw a bit of recovery, and you could see that green channel right here. Now, I had been in a locking stance because we did see a bit of a pullback here, and I expected we were kind of capped off right there. Instead, look at how things have exploded like a rocket, right? We have seen, look at the speed at this channel. In just about 10 days, we went from down here, we were at 100.50. Now we're at 101.50. We've picked up 100 basis points. Can we see what day this was? I have to, now let me go use the other one, right? So if we go here, the worst one was on February 12th. We were at 100.38. Now we're at 1 point, almost 60, right? So we've done 120 basis points since February 12th. We picked it up. We had a little bit of a drop here, and as traders caught their breath, but then it has taken off. Now, I was very worried that we were going to see a pullback as we tested these technical support levels. And I talked about this before. As we tested these levels here, the 100-day moving average, you can see it dropped down, it came back up, but like we have a trend right here that we were testing that. We've blown through that. Now, as we've blown through that, that's when I changed to a full-on floating stance, and we're seeing rate sheets that have kind of matched, some of those better levels, right? 6.79. I have this set up so that we could show you the kind of the chart here. We were in the sevens, right? The low sevens as we headed into February, and it looked like that's where we were going to stay, that maybe we'd get a little bit better. We bumped up a hair, 7 1/8. We bumped down a hair, and then now we've seen just a real dip. Now you can see we're just starting to kind of kick back up. This will drop back down, right? But we've seen a real dip. And that was helped this morning with the PCE inflation data. PCE inflation data came in matching expectations. So we were floating into this report because we didn't think that it would derail the current market sentiment. There was really no concern that was going to happen. So the Fed's favored inflation gauge rises at a mild pace and spending falls. So Fed's favored gauge of inflation right here, the PCE, we knew it wasn't going to come in as hot as the CPI because the CPI was up because it put so much weight on shelter costs, and shelter costs had gone up. The PCE, though, was expected, estimated to come in at 0.3 month to month, and it did. The core was estimated to be 0.3 month to month, and it was. The price index year over year 2.5, core was 2.6. That 2.6 is the lowest increase since early 2021, right? The smallest annual increase, the year over year, since early 2021. Now, this is the Fed's favored gauge of inflation. This is the one they're looking to get to 2%. So we're at 2.6. Now, there was a lot of concern that tariffs were going to increase inflation, but we've seen a pullback on that expectation. Markets are no longer right here. You can see markets are not worried that the idea that tariffs could end up hurting growth more than lifting inflation. So that's what the sentiment. It's all perception that's really driving things. There's nothing that's happened yet. And the tariffs have just now taken effect. So as we head into next week, we're going to hit some labor market data. Now, the big question, and let me make this full screen and show you this again. The big question is, are we, is it over? Actually, let me slide this up next to me here. You can see what I want you to see here. No, actually, I'm going to, I got to zoom out on this. How do we zoom out on this? I think I have to make it smaller. Hold on. There you go. Okay. So let me get my head out of the way. I want you guys to see this. All right. So taking a look here, right? I want to, how do I make this? I'm trying to zoom out. Hold on a minute. Let me do this. Hold on. I'm on the wrong screen. Come on. I had this set up and then now it's messed up. It's not showing what I want it to show. Oh, there we go. Okay, here we are. All right, so take a look here. This is where we were. See up here where my mouse is vibrating? This is the September best levels for mortgage-backed securities. This was all the way up at 102.50. Okay, 102.50, about 100 basis points higher than where we're at now. When we were seeing this is when we were seeing back in September. This is when we saw rates. Hold on, I'm trying to get this to cooperate. That we're down here in the low sixes. Okay. Now, as we go back here, look at how we have jumped 100 basis points, and we're back to where we were over here in October after losing ground. But before we really saw that huge dip in October and into November where bonds lost ground, we've now recovered all of that. This 101.50 is a big mark. Now, right now we're at 101.58. We could come back and test it and fall back yet one more time. Okay. Are you guys following me with these technicals? By the way, let me know in the comments. Yes, I see, I follow it, or no, I don't. Let me know in the comments because I want to make sure that we got them there, right? So what we're looking for is, can we break above this 101.50 for mortgage-backed securities? Can we enter into this new range again? And can we see mortgage-backed securities go all the way back up to where they were in September when we'd had, look at what we had in July, August, September. We were just building, really gaining and seeing rates catch up. Can we do that again? And if we do, are you ready to get those loans in? Now, it's not likely, not impossible, but not likely that unless we see really weak economic data, really weak labor market data, we're not likely to break above this level or improve past it. But wouldn't it be nice to see mortgage rates back down into those low sixes, govies in the high fives? These are those windows that we've talked about. We're going to see ebbs and flows in rates this year. And when this happens, you're going to see a flurry of activity. All right. So the big question is, will next week's labor market data drive us into this new range, right? Are we going to push back up here, and are we going to test all this? And if we do, are you ready to do business? You've got to be having conversations now about, hey, this is where we need to be. This is, if we get these better rates, are you ready to lock? You don't want to have this conversation ahead of time. You don't want them vacillating. Let's draw a line in the sand. What number are we trying to get to that we're going to pull the trigger? You're never going to always know when to time the market to get the best, right? So when do we want to pull the trigger? These are great for cash out refis, debt consolidation refis. These are conversations you should be having. This is a reason to be pushing people into getting out, looking at houses again. Remember, the housing numbers have been abysmal. The number of new homes sold or of existing home sales was like lowest on record in January. So we know that there's a little bit more inventory out there, but tell everybody it'll change like that, right? Just boom, boom, boom. So have them ready for that. Good morning, Taylor. Good morning, Mike Tebow. Good morning, Heidi, Mike Schmolgen, Tim Klyla, Mark Clark. So let me know, what do you guys think of today's stuff? We're 20 minutes in. I'm going to go ahead and wrap it up. So we're going to stop sharing. I think I hit everything I wanted to hit on this one. So let me know if today was helpful for you. Next week, labor market data is going to be a big deal. We want to see if it pushes those mortgage-backed securities into that new range. We want to see if the 10-year Treasury yield can break below its 200-day moving average at 4.24. And if that happens, this is where we're going heading into next week. So we want to be floating everything. And right now there's actually a potential for higher potential for improvement than there is risk for even short-term loans. So we want to be floating everything and seeing where we ride this. So good morning, Jerry. But yeah, I mean, this is a good sign. Very unexpected. Just a week and a half ago, nobody was calling for this, me included, especially me, right? I was locking things closing near term. I said, hey, anything that we had more time with, we wanted to float, but someone, reached out and said, I got a loan closing on the 11th. What do you think? And I said, hey, this is why, we're testing these technicals. There's a lot of indications. And that's the problem with forecasting. Sometimes it just doesn't go the way you think it's going to go. This is very unexpected. It's not like we saw any specific reports other than that one consumer spending report. Like a lot of these, they're talking about economic weakness, but not really anymore. So durable goods came in much, much higher than normal, but that was blamed on the fact that maybe a lot of businesses were buying up things ahead of time before the tariffs, things like that. So we'll see. But yeah, I mean, this is looking good, y'all. And it looks like we're going to have an opportunity to get some loans on the pipeline as we head into spring. So be ready, stay active, start talking to as many people as you can, and go check that out. So remember, if you would like help staying in touch with past clients, agents, and stuff, check us out at originatorssuccess.com. Also, Grab and Go Social. We had over 200 people sign up for the pre-sale at Grab and Go Social. Very excited about that. I've had so many people reach out to me because we only did a pre-sale for 2 days. I sent out 2 emails and 1 text message to our text alert members, and we had 200 people sign up, and I have gotten so many people that have reached out to me saying, hey, I missed it. Can I still get in? We're probably going to open it up again. Not next week, though, maybe the 10th. We want to get some of our ducks in a row. But remember, it launches for real on the 17th, but I'd love to give you guys a chance to get in cheap again. So keep an eye out for that. But anyone that was on the Grab and Go Social call with Austin this past Tuesday, Allison she said, yeah, love Grab and Go so far. So Heidi, you're welcome. Thank you, Allison. Yeah, I'm curious what you guys think. We definitely have a lot to do as far as organization. I kind of have a clear vision along with Austin. This is Austin's baby, but I have a clear vision of how best to help. Our goal is to help originators to consistently show up on social at a very affordable cost. The program is going to be $147 a month. We're going to open it up with a discount. People that have gotten it the pre-sale are getting even deeper discounts. We did a discount. It's going to be $67 a month for 6 months. So you can really get deep into it. We're providing content, tweaking content, coaching. I mean, this is something that really most others would be charging a lot more. I want to help my friends, and I know that we can stay profitable and make money too. So I'm not worried about that. There's so many, and guys, this is not something that you have to worry about your neighbor doing along with you. I mean, we've all got different social spheres. You need to be getting business in 2025 from social. So Mike said it was a good call. Allison, Austin is great. Thank you. Yep. I'll see you at VA Summer Camp, Randy. Cool. So, all right, my friends, I'm going to wrap it up. You guys have a fantastic weekend. I'll see you on Monday. Bye-bye.